If the market has another one of those spikes like it did back here, it'll hit 2,900. So do not be surprised if between now and October, November, gold reaches 2,700.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and today we're going to focus on what happened yesterday in gold and take some target practice for gold going forward. There's the title, tentatively, Target Practice for Gold. We're also going to look at a report by Jefferies in Premium. Jefferies, Fear and Greed, a well-respected, famous old-school report by Chris Woods that is talking about gold again, which is helpful. All right, so before we do that, let's look at the markets. The dollar is up 34. Everything is kind of an unwind of what happened yesterday, okay, for the most part. The dollar is up 34, 104.35. 10-year yields are up 2.5 basis points at 405.60. S&P 500 is 55.42, up 8. It was up yesterday as well. The VIX is 16.33, down a little bit. Gold is 24.41, down 6 and change. Was weaker, coming back off the lows, middle of the range now. Silver 28.95, down 5 cents, also was weaker. Copper is 4.13, down 1.5%. Pretty big, but yesterday it was up almost 3%. WTI is 79.16, down 23 after having a rip rally yesterday. Natural gas is 201, up a penny. Bitcoin is 64.6022, up 36. Got crushed the last couple of days. Ethereum is 31.87 in sympathy from yesterday. It's down 1% today. Palladium and platinum are mixed at unchanged, 928 and 974 respectively. Gold, silver is still very high, however, off the recent highs, let's put it that way. Grains are mixed. Soybeans and corn are slightly lower at 10.50 and 3.81, and wheat is up 6 cents at 5.43. Okay, looking at this chart, this was my speculation. That line's gone, right? This line's gone. So this is a buying level. I don't know what's going to go on here. We're going to discuss that. That's our chart. So on an hourly, what happened yesterday is, well, here's the 2 o'clock Fed announcement. Where is that? 7:31. Here we go. The market's been ramping for 2 days, right? At 2 o'clock, the Fed announces they're going to do nothing, which disappoints some people, but not the markets. The markets still interpret it as dovish from a Fed point of view. This rally happened during the Fed conference. Therefore, this is Fed-based. This may not be Fed-based, but this is Fed-based. The stock market, for example, confirms that. Stock market absolutely ripped all day. And then at 2 o'clock, it rallied, had second thoughts about it, and then rallied again. So basically, the markets interpreted what Powell said as extremely dovish. Now, objectively, it wasn't. It was a pullback. There's what we wrote yesterday. It was a pullback in dovishness from recent statements, but still, he left the door open for easing in September. Look, the markets just want to go up, so they're going to look at excuses to go up, not reasons to go down. Yesterday, connecting the dots, this was like the last, again, timely. This was like 6 or 7 reports that told us the die is set for gold between now and November. Here's the momentum confirmed comment that corroborated what Michael Oliver said. There's the new U.S. bill, the new U.S. bill that revalues Fed gold to buy Bitcoin. That's not going to get passed. Okay. But it moves the window for discussion. People are going to start talking about it. And a lot more material news items. Malay moving his gold offshore. But let's go to today, starting with, before we do target practice, wait, let's take a look at her. Jin taking the gold. I'm not sure if she took the gold, but it's quite a picture there. She's like a new internet celebrity, but let's get on to reality, and then we'll do some target practice. All right. Chris Wood is a longtime analyst, macro analyst, and he's based in Asia, or at least his information is. And yesterday he put out a note putting a substantial section, devoting a substantial section of it to gold itself. And he said things that we have shared with you already several times, but it's nice to see someone saying what we said. So let's just read this for a second. It is worth noting that there has been of late initial evidence of inflows into Western gold ETFs. Gold ETF holdings have risen by 52 tons or 2.1% from a recent low of 2504 tons in mid-May, 25 to 2556 tons after declining from a recent high of 3321 tons in April 22 and a record high of 3453 tons in October 2020, according to Bloomberg. And there's the chart. I'm going to summarize this for you. When the West wasn't buying gold because it was looking at the West, meaning investors and your typical macro hedge funds, wasn't buying gold because they saw interest rates as high and no reason to own gold. The rest of the world said, we don't care. We're buying it, right? The BRICS bought it and central banks bought it, which are not necessarily just the BRICS, and as well as every other country in the world that realized that gold's a better hedge for risk than dollars, given the fact that the United States can take dollars for you. Now, we had that full analysis at the bottom. He's got pros and cons in there, but it's all pros, okay? If the ETF demand is returning while China is not buying and gold's going up, well, what does that tell you? Gold wants to go up. We also have an ING report there that also covers the fact that China's not buying and gold's still going up. All right, so let's get to the target practice portion. In, I don't know, late March, after gold had an initial spike, we shared with you, if I remember correctly, this very chart without the green lines. This is what's called a GAN fan. And back then, we're not technicians, but we will dabble when pressure prevails. Back then, we said, using a chart very similar to this, using GAN fans, we said when the market was here, this little green square, we said the target is 2,400. That was the green square here, and rectangle here. And it happens. And the reason for that, we're not getting too deep into this, except to say that we do it properly, right? There's a low. There's the high, December 3rd, December 4th. Here's the line that needed to be respected. Here's the line that needed to be respected on the way up. And there's the line that it would go to. And it did. And I was like, well, it's pretty good. Now, we're familiar with GAN fans, so we don't swear by this stuff. But it gives you a target when you're out of a normal range. You're like, okay, where could it go to? You know, and people throw anything at you. But it gives you a target based on speed and slope. So it's kind of a Fibonacci with volatility implied in it. Let's take that same exact chart and zoom out a little bit to where we are now. If it worked before, it could work again. Same chart, squished in a little bit. There's the initial in, October 23. This is a daily chart. There is that December 4th area I described, okay? Here's the breakout in March of this year, and there's the 2,400 target, okay? So I moved these rectangles over. Since then, the market has come off, and you can't see it because it's in blue, but I made it in green. It's respected this line more or less. Now, it went below it a little bit, but these are not black and white things. These are about slope and direction. So it held this slope. And if it held this slope and is now above it again, well, your next target is one of two targets. If the market goes sideways, this market will melt up to 2720. If the market has another one of those spikes like it did back here, it'll hit 2900. So do not be surprised if between now and October, November, gold reaches 2700. Now, Jordan, we just did a recording of a show with him, who's a heavy technician. He uses a different methodology, but he came up with 2720 as a first target. And I think his second target might have been 3000 or 2900, but he'll share that with you sometime. But look, I just want your takeaway is this. If this line holds, you want to draw a line under here and extrapolate it out, fine, go for it. We think that's a good idea. This is a slope line. This is a support line. If that line holds, the market will grind its way to 2700 by the election. Makes sense, right? The bricks will have also met. If the market gets ahead of itself, remember these are speed lines, and this line holds, then you have the potential for a spike to this area here, which comes in at 2900. So your target should be, if you're looking for a target, should be 2700 to 2900. Your support for that target to be in place is this line. So as a trader, I would say to you, draw a line here. If we violate that line on a daily settlement or on a weekly settlement, depending on your tolerance for pain, then you're out. And if we don't, well, then you should assume 2700's in the works, because this is the market. This is the trend going back to October 7th when the Israeli-Hamas war started. And it's been this. And the market's going to continue doing that unless it breaks this line. If it breaks this line, then it's going to go all the way down to this line, which, by the way, is still 2300. All right. So there's your targets. Your target practices. You're aiming for 2900, right? You're happy with 2700 over the next 4 months. The only caveat I'm going to give to you is that at the end of August, sell season starts, and sell season will keep a lid on this. If sell season does keep a lid on it and actually drops it, well, then dips should be bought to that line, I think, and will keep the market orderly on a path to 2700, at which point maybe it could explode to 2900. Who knows? Anyway, so there's your target practice. Data on deck today is ISM, very important, but I don't think, look, the market just thinks the Fed's going to ease in September, period. The market's goofy, but that's what it is. Friday, unemployment, and there's the Jeffries report. We have the whole gold excerpt pulled out of that. I'm Vince. Quick look at the markets again. Where is that? There they are. Gold is down 5, to be expected. Silver is down 3. Let's look at gold, right? I mean, that's the hourly in gold. That's pretty cool, right? This is the Fed's going to ease, and then inventories dropped, and so it got another boost, and there you have it. This market is in a violent range now. Let's go to the daily. All right. There you have it. All right, I'm Vince. Have a great day. Catch you later.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week, where this week's special includes constitutional silver half dollars for only $2.50 over spot, one of the more popular silver items available. And on the gold side, we have 10th ounce American Gold Eagles for only $39 over mil. And to place an order or get your questions answered, call 833-326-4653 or email us at arcadia@milesfranklin.com. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.